Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Saturday, May 11th, 2013, and here is this week's weekend review brought to you by wallstreettrading.com. Before I get into the video here, I just want to share with you guys a couple things here. First of all, I hope you guys are having a great weekend so far. Also, if you have not been to the website yet, check it out, wallstreettrading.com, to get access to our live trading room. You want to make sure you fill out the form on the right-hand side of the home page, and you will get the credentials emailed to you to log into the chat room. We open the chat room at 8:30 every morning, actually around 8:20. Get some good information, some good information going in there for what stocks to watch and what's moving and shaking with the markets, from the bonds to gold, silver, copper, oil, gold, silver, everything, guys. So make sure you check it out. One more thing here. If you're interested in trading with our firm, send me an email, ccooper@wallstreettrading.com, and I can explain to you the details how you can get started with our prop firm, from getting licensed, from license to education to everything. So make sure you check it out. All right, guys, I got a good video here for you guys, so make sure you tune into the whole video. Again, we'll be going, this is the weekend review video, so this is the extended version. We'll be going over the broad markets, the different sectors, the different stocks in those sectors, some momentum stocks, some stocks that are showing weakness, a whole bunch of good stuff here, so make sure you tune in. All right, so let's go ahead and take a look. First, I want to start off with the Nasdaq. If you guys recall, last week for the weekend review, I discussed the fact that the Nasdaq was setting up to break out as far as leading the market higher, or giving the market the extra pep in its step that it needed to get that nice momentum to the top side. That's exactly what happened. So we'll take a look at the channel system on the Nasdaq futures, my proprietary channel system on the Nasdaq futures, and then we'll take a look at everything else as well. So let's go ahead and take a look at the Triple Q's monthly chart. One thing I want to show you guys here is that we finally broke above that key 50% Fibonacci level that I've been showing you guys for the past couple months here, from this sell-off, from the 2000 tech bubble sell-off to the 2002 lows. You can see at the 50% retracement, this 50% retracement was at $70.52. We finally broke above that level. We attempted to break above that level last September. It did not happen. We pulled back. Buyers came back in, and we've been going up since. All right, so that's something to take note of. The next target would be the top of this channel up here, since we're still in this upper channel. At the same time, it also lines up with a 61.8% retracement around 82.37. So we have about 11% more topside action if we continue moving higher. All right, now if we take a look at, obviously that's a little bit longer term perspective, so we're going to break it down to the small time frames here to see what we got going on here. On the weekly chart, all right, nice momentum on the weekly chart. The Triple Q's actually broke out this little triangle pattern right here. All right, and we have seen that nice fall through like you would have expected here, and that's pretty good. So again, there's no resistance to the top side until we get to like around 82, like I said, from the monthly chart to like around the top side of that channel. If we look at the monthly chart, we have the wick from the high of December 2000. Okay, the high of that wick is around 74.78, so call it 75. So 75 is most likely the next target if the Qs continue to push higher. All right, now if we take a look at the daily chart, you can see the daily chart, we're still above the short-term key moving averages here, which we're using them to lean against to kind of gauge the momentum. That's still looking pretty good. We do have this little gap down here around 72, so if we were to pull back, that would be your first area that you would want to watch. Then we have the gap fill somewhere around here, around 71.30 or so. But in the meantime, if we break over Thursday's highs, look for this to continue higher and keep on chugging along here. Now let's take a look at that Nasdaq, at my channel system on the Nasdaq futures. All right, so I can show you guys what took place. And if you guys watched a weekend review last week, all right, or the week before that, it was last weekend. Yeah, not last weekend, but the weekend before that, all right, when the Nasdaq was right here, we talked about the Nasdaq futures, all right, the NQ, if it holds above 28.80, we're going to be looking for that topside action. Why? Because if you take a look at my system here, the Nasdaq futures have been trading in this nice little slightly upward slanted channel here at a slight angle. All right, and whenever you break a channel to the top side, all right, you usually get that nice momentum breakout because a lot of stops are above these levels, and it usually lines up with a key resistance level at the same time from my studies of channel trading. All right, so check that out. Spot on, guys. Hope you guys were able to profit from that. We were able to profit from that in the chat room as we had a lot of guys looking to get long equities, for the past 2 weeks here and trying to look for that momentum in those technology stocks. Now, I got something else to show you guys here on my channel system on the NQs here real quick. All right, we had some more channels, and I've been tracking these channels for the past 2 years, by the way. These are not just random channels that pop up. The channel system is from 2 years ago. And it's pretty crazy how the market respects these trend lines, these channels, as the market is symmetrical. And now the next target's going to be somewhere near that red line, as you can see here from this next leg down. All right, this channel right here, this trend line is going to be the next target. As you can see, we broke above it, sucked in a whole bunch of longs, and then they washed the market down. All right, so now our next target's back up here towards this red line right there, which equals like around 3,025. So keep an eye on that level there. And, of course, when you tune into the After the Bell Market summary videos, we'll keep you guys updated with that. So let's keep this show on the road moving along here. Let's take a look at the SPY, starting off with the monthly chart. Monthly chart, we finally broke over that key 157.52 level, which was the highs that we made back here in October of 2007 before the bear market sell-off. And we're above all these key short-term moving averages on the long-term time frame. So even the monthly chart has some momentum in it right now, as you can see. All right, then we take a look at the weekly chart. Now, this is where it gets a little bit interesting for the SPY because the weekly chart, we have this nice little upward channel. If you connect this little pivot low down here, one second. If you connect this pivot low, this high, this low, you are able to draw a nice little upward channel. And we're getting close to that target. So if you think about it, we came all the way from the bottom down here, or right here again, and we've been traveling all the way to the top side since the start of the year. So I do believe when we do hit the top of that channel, if we do hit the top of that channel, you will have an opportunity to maybe scalp some shorts or look for some stocks that have been showing relative weakness. And you got to expect maybe some type of a little pullback there. It may not be a serious pullback, but maybe some type of minor pullback. Again, that's around 165. This is a weekly chart. It is in a nice little upward channel. We are coming up there close to target. We're about a point away from target from the upward channel there. All right, so if you take a look at the daily chart now, all right, take a look at the daily chart. This is very interesting as well. On the daily chart, the SPY, we had this little upward channel right here that we broke down out of last year. And this key trend line is still important because you want to watch to see if it's still going to back test. So I've been keeping that channel line in the on the SPY, since then. And we are coming close to that level up there. That equals around 166. The SPY still in this nice little power uptrend, as you can see. So nothing's changed. And we're still above these key short-term moving averages here, which is around, around 162.5. And we closed Friday at 163.41. So as long as we stay in this little upward channel, expect us to continue to just slowly trickle higher or grind higher, you could say. And that's about it. I mean, if we break this upward channel, you want to look for the market to probably come back down towards 159.86, call it 160. And you can also watch this 162 level as well to see if we try to consolidate a bit before we try to make a move higher. Okay, again, the trend is up right here. All right, now I wanted to show you guys something on the ES because the ES actually broke out of its, one second, I know I got a lot of crazy lines here. The ES actually broke out of this little wedge, all right, that we had going on right here. And that wedge comes from this little low, this high. All right, these are some channels that I have on my chart as well. You can see how we were consolidating between that level. Again, in the weekend, in the video that I put out over the weekend, or actually not over the weekend, but on Thursday, right? This was when we had the jobs number for that big breakout. But the video that I put out Thursday afternoon, I mentioned the fact that we were in this little compression pattern right here, and if we had some good news or if the market was to move higher, we could get a nice little move breakout. That's exactly what happened. Obviously, we had the news as a catalyst for the jobs number, and that helped us out a bit, of course, as well. But again, this is the next leg that we're going to be getting a measured move from. So this move all the way from the lows down there to, sorry for moving kind of fast too, guys, but from this little low right here, for this little pullback, we get that extension, all right, and the 100% retrace, the 100% extension from that little move down there from that 1529 to that little high up there around 1590 to the pullback, 100% is around 1640. All right, and I'm also watching this little channel line that's coming in right here, all right, against that level, and you can see how we're holding the 78.6% extension, and we're kind of compressing right here. All right, and if you look at my 60-minute chart from my channels, you can see the same kind of thing we got going on right here. This is a little bit more of my proprietary channel stuff here, but and I'm showing you guys this more because I had a couple guys that wanted to see some more channel stuff. You know, a lot of the guys that are not familiar with this type of trading find it pretty interesting. You know, because this is more, you know, it's not your regular channel trading. It's more a little bit more advanced. So anyways, you can see we've been holding down this level right here. Right, you see we had this nice little pattern coming in right here. So we're forming a compression pattern right now. All right, kind of like this. All right, and you know, we're going to see the trend is up, so I would not be surprised if we maybe get a little pullback on Monday. They try to move higher. The breakdown is going to happen when we break this little lower level down here. I say go when we break below 1620. That's when you have to be a little bit worried about your position. So aside from that, that's how the ES is looking. Let's keep this thing moving. I want to go ahead and take a look at the Russell 2000 now. Let's take a look at the IWM. All right, we're going to look at the monthly chart first, and you can see the monthly chart still chugging along higher, leading the markets up. There's the small caps here. Momentum, you can see, is on the monthly chart here. It's above these key short-term moving averages, and a nice little slope here. All right, and the weekly chart, we finally broke out of this consolidation that we've been in here since January. All right, actually not since January, excuse me, since February. We've been trading in this range between 90 and 94.81. We finally broke out. All right, and we got to close above it. So therefore, you would have to assume that we're going to get some more follow-through action going into next week unless something crazy happens. So, you know, a nice consolidation for 3 months, and we just broke out. This should continue higher. All right, you got this. As long as we hold above 94.81, you want to be lean to the bull side on the Russell 2000. All right, take a look at the daily chart. All right, 1 second. Let me put the studies back on here. Fix my charts up a bit. All right, taking a look at the daily chart, nice above these short-term moving averages, trending us higher. Everything looks pretty much intact here. Again, as long as we hold above, say, these 95s or so, we should be in good shape. All right, now here we're getting into the good stuff now, because if you were in front of your screens on Friday, we had a lot of action going on in the currencies. All right, we had the strong dollar and we had the weak euro, all right, which we've been discussing again in the videos here. If you have not subscribed to our YouTube channel, you want to make sure you do so, because we're giving you guys good thorough analysis that, you know, you can either combine it with your analysis, or you could just look at our analysis and you can make some, you know, some decent money off of it. Okay, now the dollar futures here, we got a break over this trend line. We talked about the break, we talked about the pullback and the back test holding. We also talked about the pullback right here and figuring out if this is going to actually be a higher pivot low, and that's exactly what it was. We broke out, and the dollar has this momentum into it right now. All right, so if we break over these highs right here on the dollar futures around 83.67, right, we're going to be making new highs, if I'm not mistaken. We're going to be making new highs for the year. Now, a couple interesting things here. The dollar, when it's usually strong, the market gets a big pullback. But in the case of the strength that we've been seeing for the past couple of days, the market really hasn't been pulling back on that strong dollar. Now, is this going to be the new normal with the strong dollar, strong markets, or if the dollar continues to get a little bit stronger, are the markets going to start feeling that pressure? We know the different companies that their business revolves around a weak dollar. We know they're going to be feeling some pressure, like Caterpillar, some of these big industrial names that that sell equipment overseas. All right, to these other countries. But as far as the markets go, you know, the markets are actually holding up pretty well, with the dollar looking like it's going to get stronger. But we'll have to see, of course, if the dollar breaks out, then we'll have to see how the markets react to a breakout and a new high in the dollar. All right, so that's how the dollar's looking. It's looking pretty strong. We did see some weakness in some of the basic material stocks, some of the energy companies off of that, but overall, the markets held up pretty well on Friday. Okay, the euro, this is a different story with the euro. The euro looks like it's getting ready to break down. Okay, and I'm actually trading futures right now, and I haven't had a chance to take a look at the euro futures, but I'm going to be doing some research this weekend to see how I could trade some euro action, because it's been giving you some clean setups intraday. I mean, if you take a look at the action on the 15-minute chart during the day, I know some of you guys out there trade the euro, but this thing's been giving you some clean setups. I mean, you have your clean levels to work off of. Break below it, you catch this nice move from 129.89 all the way down to, like, say, 129.4. Now, again, I have to do some research to see how that translates into trading it on the futures aspect. But, you know, I'm going to be doing some research this weekend. But in any case, let me not get too much off topic here. We have the range that we've been watching between 132 and 129.88. Right, we nicked below it on Friday, but we were able to close back above that level. If we start holding below 129.88, or just call it 130, okay, you want to look for this to start making its way back lower, back towards 128. And obviously, if that happens, the dollar is going to get stronger as people will be looking to put some money into the dollars, and then we have to see how these equities and everything correlates with that or acts around that right there, around that price movement in the euro. So that's how the currency sides are looking. Now I want to take a look at bonds as well. All right, I normally don't go over bonds in the weekend review videos. I should go over them much more, more, but you know, okay, moving kind of fast here. Keep up. Now the TLT, the 30-year Treasury bond, we sold off pretty nasty off those highs, but I have some other things I want to show you guys here. On the monthly chart, we're at the bottom of this trend line. I basically took this low right here, took this low, got a nice little trend line, draw a little parallel channel up there. We broke the downward channel, a little blip out, but look how we're back in the channel. All right, now this may not look like nothing on the monthly, of course. You do see that the 117.50 level is important. But now if you take a look at the weekly time frame, take a look at this head and shoulders pattern right that could be playing out on the bonds, all right? And I have a way to make money on this trade if bonds are in fact going to start selling off. I have a vehicle that you guys could use to get short with some leverage, and that is the TMV. All right, the TMV is 3 times short the 30-year Treasury bond. All right, we'll take a look at that here shortly. But in any case, you have your left shoulder right here. You have your head. You have your little right shoulder that could be forming right there. I would say if we break and hold below, I would say 116. Just to give it a little bit more confirmation that we could start breaking down here. If we break last week's lows on the TLT, which is 117.85, and we break below 117, 116, I think where this pattern could play out here. So keep an eye. The big breakdown is going to be when we break 112. Now, if bonds start to make their way down, interest rates, of course, are going to start rising or creeping higher, and we're going to have to pay attention to that right there to see how that's going to start playing out. If in fact, of course, there's always manipulation going on with the interest rates and the bonds and all this stuff like that. So we'll see how everything plays out. But I just wanted to show you guys this pattern that we have on the chart right here that could be telling us something that we have to make sure we pay close attention to. If the bonds sell off, is more money going to come into the equity markets? And we do have some upper price targets, and the least path of resistance in the equities is to the top side. So therefore, we could get some, more traction in the market as people start putting more money to work here, as we've been seeing. And we had those late retail traders chasing the market, chasing performance, along with some of these funds that did not have confidence in the market, and now they're starting to see the market's moving higher without them, so they want to start participating as well. So the TLT breaking below 117.72, 118, Friday's lows, we could start coming back into that little channel range that we had from all this little price action that we had between these two levels there. All right, what else do I want to take a look at with you guys? Let me see here. 1 second. All right, went over that. All right, let's go ahead and take a look at the commodities now, starting off with copper, because copper has been showing some relative strength here. Even though it sold off pretty hard, for the past month or so, it did get a nice little bounce, and we are back above that key 330 level. I really want to see us get back above 350 or so, 355 up here. We want this thing to move back higher. This could be telling us a good sign right now as well. It's maybe saying that there's a demand for copper. There's some growth going on a global scale. But, just in general, copper got a nice bounce and looks pretty good. All right. And I watch copper so I can watch FCX and SCCO and some of these basic material companies. All right. And you see FCX has recovered as well with copper. So if you watch copper, you can, trade FCX in correlation with that and make some cash flow. All right, so anyways, copper is looking pretty decent. Let's take a look at gold, starting off with the gold futures. Now, gold got smashed pretty hard on Friday. It was able to recover off the lows, but just take a look at this range on the gold futures here. All right, actually, let me bring up my gold chart real quick on an intraday basis so I can show you guys something here. Take a look at this action we had in gold, right? We sold off, had this nice little bear flag that formed around 7 o'clock in the morning. We broke down. Gold sold off all the way to a low of close, call it 418, and we recovered to a high of 1447. So there is definitely some volatile action in the gold. If you're not built for it, you don't know what's going on with the gold, do not trade it. It is volatile. You can see we do have resistance right here at this 1475 level. but we are now trying to hold this little range between 1475 or so and 1450. We break over 1475 and we hold. We'll be looking for a move up towards back up towards 1513. And now, if you take a look at the weekly chart on gold, all right, gold still holding that little back test trend line that we have from this high, this momentum break that we have from the trend line. And you can see we sold off below it, but then for the past 2 weeks we've been holding above it. So let's keep an eye on that right there, or pretty much just keep an eye on this 1400 level and that 1475 resistance in this little range right here. Okay, take a look at the monthly chart. Monthly chart sitting right on top of the 50-day exponential and simple moving average right there around 1740. That's the level. All right, I'm not going to take a look at the GLD. You guys could take a look at that. Same thing as the G gold futures, of course. All right, let's go and take a look at crude oil futures, CL. All right, crude oil futures are back above that key 93.95 level. Even this had some crazy intraday action. Let's take a look at the intraday action real quick on the crude oil. All right, even crude oil sold off pretty hard overnight going into the open, and then reversed pretty hard. V-shaped recovery, so there's definitely some demand for crude oil down there at 93.40. All right, and that brings something to my attention here with the fact that we're back above these 94s. We sold off to that level down there at 94, and demand came right back in the market. So I would say this 94 level is going to be a key level to work off of. And if we start consolidating up here off this move off the lows, we're going to be looking for another leg higher in crude, maybe move past 98. But, you know, again, we got to see how this dollar action affects some of these commodity stocks and some of these commodity sectors and commodities in general. All right, and then I know some of you guys watch the USO, so we'll take a look at the USO real quick here. All right, USO ETF. See a nice leg down here, leg up here, leg down, leg up, or just leg up. So there's some action in the USO, which is a ETF for crude oil. Again, we had that little head and shoulders breakdown right here. Measured move broke down to the T, to the right measured move, and now we're back above that neckline. So anybody that got short pretty much USO below 33, they're in a losing position. And now as long as we hold above 33 and we consolidate between 33 and 34.50, we should be building some energy for another move higher, most likely. Again, you know, that's a forecast. We'll keep you guys in tune with that as time passes by here. All right, so that's USO. Let's take a look at silver for the last commodity here that I like to cover. And for silver, I just like to take a look at the SLV. I really don't look at the silver futures. Well, sometimes I do, but I like to take a look at the SLV because it's not that bad. SLV, the lows on the SLV for the year is 22. If we break below 22, we'll be looking for some lower prices. Resistance is right here at 23.5. Take a look at the monthly chart. We break below 22. The next target is going to be down here towards 20. Weekly chart, you see it's below these. If you can see the weekly chart, it's below this declining moving averages right here. And then we have the monthly chart. All right, the monthly chart has some nice support back from this little prior resistance, now support. All right, we broke out, so it should act as support down there. And then 1880 is that 200-day moving average. So, you know, we could get a little flash down action in silver. That could be a buying opportunity. We'll have to wait and see. All right, now let's take a look at some key stocks. I took some notes here, so let me just look at my notes here real quick. You know, the financials are still hanging in there. The commodity stocks, they got hit a little bit from the action in the dollar on Friday. All right, and let's go ahead and take a look at some stocks here. All right, so let's start off with the financials. Goldman Sachs. Goldman Sachs did break that little downward channel. It's still holding above that little key downward channel level, and looks pretty good. All right, as long as we can hold, I would say as long as we can hold above 146, 147. All right, expect this thing to try to make a move higher. Like I said, it is breaking that nice little downward channel. And you guys remembered what happened when Halliburton, I was about to say Halle Berry because I usually call it Halle Berry, but Halliburton oil driller here. You guys see what happened when this one broke this nice little downward channel. All right, and I saw a couple of these patterns around in different stocks here, and you know, so far they're playing out pretty well. So if the financials, you know, get another leg, momentum leg higher in next week, you want to make sure you focus on Goldman Sachs because this one's been holding above that little key trend line for 1, 2, 3, 4 days. Now, if we break back below that trend line, look for a move back down. I would say back down towards 144, 145 or so. That's of course if we get some selling pressure. But if we don't get any selling pressure, I'm assuming these financials are going to keep on moving higher. Morgan Stanley showed some nice action on Friday. Was one of the stronger financial stocks out there. Was up 2.25%. This one's continuing to move higher, and looks like it wants to go and make new highs for the year around 24.50. If you take a look at the 60-minute chart on this one, you can see it has that nice little rounding kind of action right there. Looks like it's getting ready to put a nice little power move in. So keep it on watch. Nothing too crazy right now. Just keep it on watch. Citigroup, another financial stock that's been acting pretty well here. You know, respecting its moving averages, trending along higher, grinding higher. You know, it's all right. Bank of America. Bank of America broke out on, what day was it here? Bank of America broke out on Monday, and so far it's been holding, you know, the high of that bar, the breakout bar, or even better yet, it's been holding above the 50% range of that breakout bar. All right, and Bank of America looks pretty good. Let's take a look at this one on the 60-minute chart. This one's just in consolidation mode right now, between 1287 and 1315 or so. But once we get out this little range, we should get a nice little push to the top side, as we do have, you know, momentum is in the name right now. All right, what else do I want to talk about here? We're seeing some action in some of the retail stocks, but maybe some of the retail stocks that you wouldn't expect to move higher. First of all, Sears, SHLD. This thing had a nice little breakout. All right, the stock's been in this little range. I've been tracking the stock for the past 2 years or so. That's why I still have this little analysis on it here. Well, I would say for not the past 2 years, sorry, but like for the past year and a half, I've been tracking it. But let's see here. You know, see, it's been trading this little range between 62 and 47. We broke above the 54 level. We have this nice little gap window that's going to be coming in right here around 58. So this thing still has some more top side. And if we break over 58, this thing could see 62 and then could see back towards these highs. So you want to take a look at Sears. All right, they do have earnings coming out on the 23rd of the month, but this stock has some nice momentum into it. Or I should say this stock has some nice momentum in it, and as long as the volume continues to move higher, we should be looking pretty good. So keep an eye on Sears. You take a look at the 60-minute chart straight up. All right, so this trade setup that we'll be watching for this in our live trading room, My Wall Street TV, will be to buy some type of pullback and get, hopefully off this nice momentum, you should get a nice initial reaction instantly for a nice little pop-up, even if it's for a scalp. So keep that one on watch. Sears. All right, Lulu's looking pretty good. Lulu just broke out of this nice little range. Flag action we had there from this nice little power move up. Okay, so if we get that nice extension, measured move, we're talking about 68.78 to 77. All right, 68 to 77. So we're talking about 9 points there. So 9 points plus a 77 will give us 86. So this thing still has some nice upside action, guys. You want to make sure you pay attention to it on the hourly chart. You can see it's a little bit sloppy here, but that's not. It doesn't surprise me because Lulu does trade sloppy when it's in play a bit, unless you catch that nice momentum move. But you know, usually after that it consolidates a bit, pretty sloppy, then it usually does like another leg higher. So just keep an eye on this one here. I would say if it holds above 79.93, call it 80. All right, we're going to be gearing up for a breakthrough this 81 level that holds. All right, so keep that one on watch. That's another nice little stock out there. MCP, they had earnings on Friday. This stock has some nice momentum in it as well. If you're looking for some momentum trades, MCP, maybe see if you get some type of pullback action on this right here, but make sure you have this one on your radar. May want to go up there towards $9, which is you know, some nice money there. If you're talking about another $1.70 in the stock. All right. I talked about Morgan Stanley. What else here? GMCR had some decent action last week. Obviously, it's up here near the highs, but at the same time, there is some nice momentum in the name here, and maybe you can see if you can try to buy it on a pullback early next week to get some nice prices and go from there. All right, this stock doesn't have any resistance really until like back around this area right here. I would say around 84 or so. So there's definitely some more action in that name. Netflix. This stock had some news with Disney renewing a contract with Disney. The news came out Thursday. The stock ripped. You can see it's trading above this nice little downward channel action we have right here. So I would say as long as it can hold above Friday's lows, all right, 214.56, this thing may be ready to go for a nice move to the top side. Real quick, looking at the 60-minute chart, you can see nice little upward movement right there, upswing, nice little sideways consolidation. trading above 219 and holding this thing. I have a nice leg higher. You want to make sure you're paying attention to the stock early next week to see what it wants to do. LOW lows. We mentioned lows last week, and the stock has been performing pretty well. All right. Again, we talked about lows in the weekend review video, discussing the fact how it was breaking out of this nice little symmetrical triangle right here. All right, and that worked out pretty well, folks. All right, we're talking about a move from 39.5 all the way to 42.5 in a matter of 5 trading days. All right, those options are up a lot, folks. All right, and then you could have looked at Home Depot to as a sympathy play to play some catch-up action, and it hasn't been that clean, but it has been giving you opportunities to buy the dip intraday and make some money, or even buy it on Monday and hold it for the week. Some nice action there. All right, Disney. I mean, we got some nice power stocks moving, guys. Disney, look at this power trend right here. Disney's been a top performer for the year, of course. You have Disney, you have Yahoo that's been trading pretty well. Oops, 1 second. You have Yahoo that's been trading pretty well. Let's go ahead and bring this chart up. All right, this one's looking real good. All right, trying to break this little upward channel line right here. Take a look at it on the weekly. Nice momentum in the name. Take a look at it on the monthly. This thing's nice little power trend on the monthly. Looks like it wants to go up here towards, I would say, wants to make a move back up here towards 31 half. Obviously, it's going to be hard to kind of get it. It's going to be hard to get an entry right now, but you're going to have to pick your spot on it. Take a look at the 60-minute chart. This thing's getting away to continue to move higher, but that's how that's looking. You can also take a look at VMW. VMW is shaping up to get another leg up. It looks like here. Held a little double bottom action down here around the 70 level. Broke out the range, shot up. Now it's flagging a bit. Keep an eye on this one here. I really like the way how this 60-minute chart is looking. Okay, because you can see this 23.6% level from the extension retracement was acting as resistance to the T. Obviously, it lined up with this analysis right here for this resistance, but I like how it acted and respected that Fibonacci retracement. So definitely people are watching this stock, and if it breaks out over 77 and holds, 77 and it holds, you can look for a move up here towards 78.5. So keep this one on your radar for Monday, early next week. Then you want to watch EMC with the VMW. We are seeing some buyers come back into the coal stocks. I'll be a little bit careful with this though, because if the dollar gets strong there, these names could do a little BS breakout and try to pull right back in, pretty nasty. But WLT looks pretty interesting as long as it can hold above 18 or so. All right, this thing looks like it wants to push up higher and probably move up towards 23, giving you about 3 points to make there. Again, we'll have to see how these coal names react. They had been dead money pretty as of late, but now they're trying to pick up some momentum, but it's still kind of a tricky sector to trade right now. Aside from that, I really don't see many weak stocks, guys. I mean, CTSH is one of the weaker stocks out there. You can see it sold off. It retraced maybe about 38.2% or so. Had a little indecision candle, then got smashed. You want to watch this for a break below 64 on Monday. All right, I'm seeing some weakness in HES, HES. All right, this one can't hold above the 71 level. Broke back below the 50-day moving average and could move right back down towards 67. So you want to watch that name. And then Caterpillar looks like it's a little bit weak because that dollar strength that came into the market. First of all, this was a weak stock in general. Only reason why it got a bounce because it was so depressed from those 98 all the way down to 80, and it got a little break and hold, rally up, and now we're getting rejected at this 200-day moving average area. All right, so aside from that, hope you guys enjoyed this long video. Have a great day. I'll catch you guys Sunday night at 9:30 p.m. in the live chat room. Again, if you're interested in trading, with our firm, contact me, ccooper at wallstreettrading.com. I could explain to you the information, how to get licensed and trade with our firm and be a part of our trading group, guys. Got a lot of good stuff in the pipeline. Have a great weekend. Cheers.